was kind of those, a bizarre, weird day where, everything is set up perfect pre-market. Everything is set up perfect. When the bells open, the bells rings and the market opens, and then boom, off the track we go. Everything is up. Crypto is up, oil is up, tech is up, everything is up. And then slowly, all of a sudden, boom, something happens and we end up flat. All right. This is one of those days we have today. But let me share with you in this video something that Morgan Stanley said, which has the potential of having a clear, direct implication with this stock because it addresses the situation of the short sellers in this play. All right. Like what you share when you look at, the market action today, you see that interest rates is the reason, at least one of the reasons why stocks did not end up today 300 points for the Dow Jones, 1% as the other markets. You look at Europe, you look at, Asia, they had a good day. They had a good, decent green day, but with US, no. But we end up, we started the day like this. You can see, on the chart here that, things went on the downtrend literally, since the beginning of the later part of the morning session. Why? Because interest rates started going back up above the 3% threshold when it comes to the US 10-year yield. I'm talking about the yield here. This is kind of in preparation, as some investors are looking ahead of what is going to happen on Friday with the CPI data for the month of May. All right, because that will give us a clear indication whether or not inflation has peaked. Yet, if it's the case, then market will be relieved because it means that the Federal Reserve is not going to do or going to be as aggressive as people are anticipating. But this goes back to what Morgan Stanley said also, because they see a shift. This is a co-president, a shift into the market being on the way. Expect fire and ice as a massive shift in markets gets underway. And he's talking about something we mentioned in this channel, a couple of weeks ago. It's an extraordinary moment. It signals the end of 15 years of financial repression, Ted Pick said. Wall Street chief executive, including Jamie Dimon and Jane Fraser, have also warned that a recession looks inevitable. Not only because, they're afraid of demand and everything, but because for the last 15 years, the market has been operating on low interest rates, pretty much close to zero, low interest rates. When you look at the combination and the intersection of the pandemic, the war, inflation, it signals a paradigm shift, the end of 15 years of financial repression and the next era to come. But because, and that is precisely why I keep saying we've never been in a spot like this with the economy. It's extraordinary. It's really an extraordinary moment because we had our first pandemic in 100 years. We've had our first invasion of Europe in 75 years. And we have our first inflation around the world in 40 years. So we're really at a very interesting moment. And this moment, when he talks about financial repression, he's referring to interest rates being so suddenly changing because U.S. markets have delivered strong returns since 2008. That was the last major crisis before the pandemic, with loose monetary policy leading to an abundance of cheap money. But here's the thing, folks. For the first time in 15 to 20 years, the Federal Reserve is shocking the system by suddenly and aggressively going in the other direction. It means cheap money is gone. It means expensive money is here. It means a shocking to the system of the modeling, or the model of how these big firms on Wall Street have been operating. You know what? It's going to be a big change because when money is cheap, it's easier to go on big bets. When money is cheap, it's easier to go heavy. It's easier to have billions of dollars involved into a single play, a single stock, a single trade. And that is precisely why it's been so easy. Plus what is happening with DARPOs and everything for, some of the short sellers, still active in AMC. While on the other hand, you have millions of buyers and holders and the stock keep operating in a bizarre way. But now it's changing. Not only is changing on a long period of time. So this interest rate increasing is not going to be just for the next 2 months. It's going to be for the next 24 to 36 months. All right. And it's going to be aggressive. Like each single month, they're going to have something coming from the Federal Reserve, at least as of today. All right. So as the system is now being shocked, those companies operating under the old system where money was cheap will have to shift that paradigm. So if you are not following and changing your strategies, you're going to end up being crushed. Because the bets you made and the strategy you made was based on something that is not true anymore. So they're going to have a massive pressure on them, on their shoulders, to turn around. Otherwise, clients are going to flee. Otherwise, money is going to dry. Otherwise, they're looking for bankruptcies. And that's why this is very, very, very something we need to monitor as far as the short squeeze in AMC, because that is part of the catalyst. All right. When money is cheap, when money starts to be cheap, starts being cheap, and money starts to be expensive, it's hard to sustain those positions. It's hard to be heavily invested in a stock that buyers won't let go, and you're bleeding every single month. Just look at Tiger Global. Just look at D1. Just look at all these hedge funds. We constantly update you on whether or not they are 50% down so far for the year, whether are you returning money to clients, whether they're closing doors. It's because what is coming is gonna be massive. All right, so. Another thing to partake into this whole short squeeze play, because we all know it's going to be the mix of a bunch of things, but suddenly something can just happen, and this ticking time bomb, this ticking bomb can just go off based on just something as little as nothing. But we want to be there when that happens, because this time around we are on the right side of the trade and we won't let go.